real fortunate to have Andy Price from the World Council of Credit Unions with us this afternoon as I put in my announcement of this gathering for this week. Um, we're all certainly very familiar with, all the hoops and hurdles you've had to deal with as people running credit unions in Vermont and in the United States. Um, But what I thought might be interesting is if we heard a little bit of what was going on in other countries. Some of us, like our association and about 3 or 4 credit unions in the state, have had international partnerships with credit unions in Peru and elsewhere in years past. And of course, things are a lot different. I'm going to go through and mute the ones that I see that are not muted, if that's okay with everyone. Um, there we go. And some really unique situations, regulations, and so on and so forth in a lot of other countries. And so, Andy, his day job with the World Council of Credit Unions is Senior Vice President of Advocacy at WOCCU. He's based in in Washington. He leads WOCCU's advocacy effort for credit unions. And I have a hard time fathoming this because I know what it's like to deal with the Vermont legislature and local regulators and members of Congress. But Andy is having to deal with international standard setting bodies around the globe and whatnot. And I just, complex, all over the place, differences everywhere. So it must be a real challenging job to be doing, Andy. But that's not why we have you here talking today. Um, Andy was also a general counsel for First Commerce Credit Union and worked in advocacy for both CUNA, the League of Southeastern Credit Unions, and also at one time was a regulator, but we won't hold that against you. We know that's in years long past. So thank you, Andy, very much for joining us. And I don't know where you want to start, but anywhere is going to be news to all of us. So just jump right in.
Well, thank you for having me. And Joe ran me down all the things that he's doing with y'all, particularly with respect to COVID. And I think it's just wonderful the sharing that goes on among credit unions. I mean, it's the best way to operate, and I love seeing that. So what I kind of think I do is I'll run you through what the international standard setting bodies have done and relate that to kind of what's happened in the U.S. and then I'll put it in that framework, and then I'll get down to what we're seeing in a lot of the other countries around the world and some of the challenges they're facing, and I think it'll be surprising how similar a lot of their situations are to what you're going through as well. And so I look at the United States response, and I actually, as a former regulator, I will not compliment the NCUA, but they've done a reasonably decent job coming out quickly with relief items and being on top of that. And part of that as a result is they've been through a lot of disasters, Katrina and the fires and floods in the Midwest. I mean, you name it. They've kind of seen it, and so they're used to responding to disasters, and you kind of saw that in the relief items that came out, and they responded fairly quickly. PPP loans, I think, is probably a black mark on everyone's list of things they could have done a lot better. But a lot of what happened came out fairly quickly and was well thought out. And a lot of it what happened was based on what happened at the international standard setting bodies. The Basel Committee is really kind of the main committee out there that sets capital standards, and they work kind of hand in hand with the IASB, which is the International Accounting Standards body, sets all the accounting rules akin to FASB here in the United States. You saw a lot of relief measures coming out on that, a delay in the implementation of Basel III, which you saw the NCUA respond, kicking the risk-based capital rule down the road. And there's a good argument to be made that you don't even need a risk-based capital rule, but that's a whole nother sidebar topic, but you saw them delay the risk-based capital rule. Kind of lines up with what the Basel Committee did with their delay in the implementation of Basel III. Same thing with CECL. The Basel Committee and ISB did 1-year delay in the implementation of that, and you saw a corresponding delay come down in the United States, and NCUA joining in that as well. A lot of the accounting measures things, there's things that happened at the international level. With respect to COVID-19 particularly, they came out and said, look, don't start including analysis of the COVID-19 crisis into your expected loss calculations yet. They say it's too speculative right now. Don't go through that exercise. And that's in part to give some relief as we're dealing kind of with the immediacy of the health crisis as well. They will probably revisit that as time moves on here, but that's something that came out of the international standard setting bodies. There was an additional capital add back provision that they put in there, which is designed to transition your expected loss to let you add your expected losses back into your capital and then amortize that over a period of time. That kind of goes along with the delay to kind of ease the implementation of CECL into your balance sheets. And so you saw that come out as well. And then a lot of relief measures, I think, that have filtered through in the US with respect to payment moratoriums and forbearances on foreclosures and the provisioning that needs to go along with that. You've seen that almost universally around, not only from Basel Committee and IASB, but most national level regulators adopting some sort of relief for your accounting with respect to that as well. And so I frame it in, United States and Canada, Australia are our 3 largest credit union systems. You saw all of those, and I call those our developed nations. You saw them react very quickly to the crisis and issue things kind of consistently with what the international standard setting bodies did, what a lot of the other nations that are similarly situated do. That's where it starts getting different. When you start getting into your smaller systems, the response has been a lot more varied. And there's a kind of a common theme there that I think you'll find familiar. We often see the banks getting treated more favorably than the credit unions right off the bat. I think you're probably used to that in the United States here as well. One of the key issues that showed up was the being designated as essential. That is not automatic in most countries. A lot of times the banks get it quickly, but credit unions aren't included in the definition of bank, and so they do not get declared as essential. And so when there's a lockdown, they can't go in and operate their credit unions because they're under martial law or whatever lockdown order is available in their country. And that's a big deal. In the Ukraine, they went even further and shut down the credit unions for about a month. And in part, their reasoning for that was they looked at a lot of the credit unions and noticed that they didn't have a lot of online offerings. And so they said, well, you're not online, so you can't operate anyways. We're just going to close you down because you have no reason to go in to the office. You can't provide any services. And so that was, it was kind of like, oh my God, what have you done? But eventually they came around and allowed them to open. So that's kind of an interesting problem that we've seen being designated as essential. And I even saw some states perhaps had to jump through some hoops here in the United States. The issue of virtual meetings has been a big challenge. Although it's interesting, the mindset that you're seeing from regulators has changed on that a lot. And a lot of credit unions in the Caribbean and Africa, in order for them to declare a dividend, they have to have an in-person physical annual meeting, and that's when they declare their dividend and what's going to get paid out and returned to the members. And a lot of regulators were hesitant to say you can't pay out a dividend until you have that in-person meeting. And by the way, you can't have an in-person meeting because of COVID. And so you just had to kind of, okay, how are you going to do this? So a lot of them, we were able to kind of come around and say, look, have the CEO certify that the financials are good. Let them go ahead and pay out the dividend. And when they can have an in-person meeting, they can go back and ratify that. And if we need to make adjustments, will do it. They kind of came around to that, and now that the crisis has gone on, you actually see their minds shifting now, and you're actually starting to see the regulators start to encourage digitization and doing everything online because it's helping them deal with the health crisis. So it's interesting to see how that paradox is kind of feeding into each other. And here at WOCCU, we're encouraging digitization all over the place. It's just, that's the wave of the future, and it's going to help credit unions grow. That's a whole nother topic as well. But it's interesting to kind of see the regulators coming around on that. And so you're starting to see a lot of the regulators allow for board meetings to meet virtually, and giving them procedures for how to conduct the annual meeting, and can you allow voting and questions and guidance that comes out on that. I know the NCUA put out some guidance as to how to do that as well. So interesting to see that that's a big issue as well. Liquidity is interesting to me because it's been a mixed bag around the world. If I go to Ireland and Brazil, you actually have the problem of they have way too much liquidity in their system, and there's all kinds of structural reasons why that is. In Brazil, a lot of it is you saw a flight to safety among a lot of the citizens, but you also saw a lot of the government benefits that were coming through, and those were just kind of being put into the credit union. So their liquidity they have is shot through the roof, which is making the regulator look at them as being more risky. But I mean, it's going to filter out over time. So it's been an interesting conversation there. Ireland has always had too much liquidity. They've got a 10% capital level, and their pricing on their products is way out of whack for all kinds of reasons. And so they've always had way too much capital in there, but that's not what we're seeing in the rest of the world. In the Caribbean, in Estonia, in Africa, we had situations where there were, I mean, we actually had runs on the credit unions. People were scared, they wanted to come get their money out. And so dealing with that for a period of time was difficult. Some of that is a result of not having access to central banks or a correspondent bank or some sort of central liquidity facility as well. That's often very difficult around the world. A lot of times, because of anti-money laundering regulations, a lot of correspondent banks do what we call de-risking. They actually, you don't bring enough volume to them, so they don't want to do the paperwork on anti-money laundering on you. So they just say, forget it, I'm not doing business with you. And that makes a credit union have to go to a second tier or third tier bank that can be very expensive or not at all. So liquidity can be a tricky issue, but it's been mixed kind of all over the world. And so you've seen the response that's come out with the health crisis. And what you're seeing now, though, is I'm starting to turn to what I call dealing with the institutional stress. You know, you're now going to have people who are, the government subsidies are running out. They're not going to make payments. You're going to see the losses start flowing through to the credit unions. And so you're seeing regulators start to think about what are going to be my resolution tools? What am I going to do? You know, can I do a capital restoration plan? Am I going to merge you? We're out there encouraging them to let credit unions merge with each other when you get to that point, because we want to keep assets in the credit union system. So that's an issue out there as well. We're starting to work with them on a lot of guidance as far as how to deal with things with deferred payments, TDRs, trouble debt restructuring, refinances, how to do that, hoping to get some regulatory relief for being able to do these things without, you know, making your allowance account go insane as well. The issue of non-performing loans is a big issue out there, particularly in Europe, where you see Italy and Spain and Turkey. I mean, their financial situation has already been bad. They had a lot of non-performing loans in the system. Their banking systems are kind of teetering over there. And so you saw a relief package come out of the EU where the richer countries are kind of putting money in to those poorer countries or countries that are having more challenges economically to deal with a lot of the non-performing loans, because in the EU they're worried about that filtering through to everyone else. And I've heard some countries actually, talk about how are we going to deal with non-performing loans? Can we set up toxic banks to put in the bad assets in there and get them off our balance sheet? Some of those discussions are going on as well. So I've done a lot of talking. I put out just a ton of things. Let me stop and open it up and see if y'all have some questions. I can probably tell a couple more war stories as well if you want.
Andy, I don't know if it's still the case, but I recall that it used to be fairly common, or at least not uncommon, for in some countries to not have any form of deposit insurance among credit unions.
Yes.
More of the developing kind of nations and whatnot. And so when they have a situation like maybe they might be contemplating now and going forward where, here, and I think a lot of us believe that the worst is yet to come for financial services as far as, the price we're going to pay as service providers and whatnot. So if that's the case, similarly in some of those countries, and they get to a point where they're shutting down credit unions, what do they do when they don't have deposit insurance to fall back on to pay people?
Yeah, they go and beg the government is kind of how it works. Yeah, in Ukraine, I have that situation. I actually have credit unions there that are issuing shares as deposits. And they're really, when you look at them, they look like a storefront payday lender would here in America, kind of. They're making small loans, oftentimes to insiders as well. Some of them I think are money launderers, if you want to be honest about it. But yeah, they issue shares as deposits, and there's no disclosure on that. The member has no idea how it's being put on their books, and it's just like oh my God when you see it. But it scares the bejesus out of me. But yeah, you see that in the Ukraine, and their numbers. When I went out there 3 years ago, we had some. I don't know, 900, 1,000 credit unions. They're down to like, 300-400 now. So they open up, they operate, and then they get insolvent, and they just, sometimes they sit on the books of the regulator, but they're not operating. But they basically just go away. They come in, they're almost like fly by night, make their money and then, take it and leave. So, yeah, we see we see some systems out there where they don't have deposit insurance. Most of your developing ones, a lot of times, the associations will have some sort of security fund for those that actually join them and try to operate with some proper standards. We see that. I was in Moscow. They've got like 10 different self-regulatory organizations out there, and I'm just looking at it going, oh my God, because you've got standards all over the board, throughout. And I keep telling them, I said, look, get this down to 1 or 2, so you've got some consistency among
Right.
among the country. But some of those associations will have some sort of guarantee fund in there as well that'll help support those systems when they come. But a lot of places it's all over the board, and yeah, some of them don't have much there at all. I see it in Africa a lot. In Africa, there's a lot of systems that don't have deposit insurance, and there's a lot of little junky credit unions. Some systems are much better than others. Kenya's pretty good. South Africa's developing, but there's a lot of them out there that they need some work.
Right.
Yeah.
I also seem to recall that, and I know this was the case in Peru. I don't know if it still is. As a matter of fact, it was also the case, I think, a while back in north of us in Vermont, in the Desjardins system in Quebec,
Yep.
where the regulatory body used to, I don't know if it's still the case, would delegate its examination authority of credit unions to whatever amounted to the trade association and their locale and whatnot. And I'm just wondering, one, I don't know if that still goes on in some countries, but if it does, doesn't that kind of complicate the current kind of situation and the evaluation of
Yeah.
credit unions? Because it's in the trade association's best interest to see those credit unions continue, but the regulator may think otherwise if they were doing the examination.
Yeah, it does. And I mean, WOCCU in its Model Credit Union Act, we always urge for direct regulation by the government.
Right.
I mean, an association is great for education, training, helping with compliance, all that. But having, that we want the direct regulatory authority to come directly from the government. I mean, that's usually a better way of doing it. You're right. In Peru is actually transitioning. I think they're trying to move that regulation back to a regulator, but the way you articulated it is how they're operating. Poland is an interesting example because their system is developing, it's growing, it's doing well, but their association has a regulatory function, although they keep it really segregated, from the trade associations. I'd keep that kind of independence. But their self-regulatory organization there has done a good job of regulating. So it can work. I don't think it's the best way of having it work, but there are examples where it does work to an extent. Although Poland has had its problems as well, but so you do see some examples out of there. In South Korea, they've done a really wonderful job of having a self-regulatory organization, but the key to there is they have total transparency with the regulator. The regulator can access their databases at any time they want, and there's a lot of integration that's been done there. So even though you have a self-regulatory organization that's running it, the regulator is always in contact and knows what's going on and has confidence in the numbers that they're getting, and that kind of stuff. So there are examples where it works, but it wouldn't be my preferred way of having it done. So,
hey, questions, comments for Andy? Anybody?
This is Jean from Vermont Federal Credit Union. I can't imagine keeping all of that straight in my head. It's amazing that you understand all these credit unions so well and the country so well. How do you track what's happening in each of the countries? Do they call you when they have problems? Do they report monthly? How do you keep track of what's happening?
Yeah, that's a great question. So I kind of have a regional structure. Canada and Australia are really big and have great associations, and they're more sophisticated than I am and know. They know. I rely on them a lot, frankly, for information and insight. So I treat Canada and Australia, and they're my two largest members outside of the United States, and have large, sophisticated systems and regulators and associations there. So I kind of treat them separately. In the EU, I treat all of the EU regulated credit unions. We operate there under the European Network of Credit Unions. That's actually WOCCU, but we like to have Europe in our name because it's much better to lobby that way. And so we have a group of all of those that kind of get together. We used to have 2 in-person meetings, and we go lobby the parliament and all those things you're supposed to do. We're doing a lot of that virtually now. And we have a body of the parliament that is set up that's made of members of parliament that are our advocates, and they have meetings for us as well to help advance our issues. So the European Union, I kind of deal with that way. In the rest of the world, for the Caribbean, there's a Caribbean Confederation of Credit Unions that kind of represents all of the ones in the Caribbean. And so they do a lot of the coordination among the states, and then I deal with them as well. Same thing in Africa. There's a CASCA. It's a association there that represents a lot of the entities there. Latin America, we have Tom Belekovich, who works for WOCCU, actually lives down in Costa Rica, speaks Spanish and helps coordinate a lot of, the Latin Americans are really good about coordinating with each other. So I kind of work through that mechanism. My wife is from Peru and I speak Spanish myself, so I love dealing with them down there. I know you wouldn't be able to tell that from my, how I'm a purebred gringo American. So, but I did pick up Spanish along the way. Same thing with Asia. I have an association over there that kind of represents all of the Asian credit unions as well. So we're, kind of doing that regional approach kind of keeps me in touch with what's going on with all the world. But before COVID, I used to travel a lot. I don't do any traveling anymore, so I do these Zoom things now. But we can keep up, and working through the associations is a enormous help. And WOCCU has 118 countries as our members, so a lot of the individual countries are individual members, and they reach out to as well, and will consult with an individual country if they want to, or if they want a letter to go into their regulator on a topic. We do that as well. So it's a lot of keeping up with it.
Thank you.
Cool.
Andy, a related question to what you've been talking about in terms of the different regions. Is there a country or a region where you would see the most risk to the credit union brand? Meaning, you know, an area where there's something that could go the wrong way?
Yeah, there's a lot of them.
Okay. Well, I was hoping there'd be a few of them, but
yeah, there's places in the world that are stronger than others. In Africa, there's a lot of countries that are. I mean, I'm shaking my head as to how they operate. But but you go into somewhere like Kenya, and they're doing really wonderful. With their model and how they're doing it, developing, and they do a lot of work to help bring along a lot of the other countries. And they organize some conferences with the regulators, and the regulators come in and have a conference. And they sent me to Nigeria 2 years ago to go down and meet with them, and that was interesting. I had one regulator actually ask me what anti-money laundering laws were, and I just had to go, oh boy, we need to have a long conversation. I won't tell you who that is. I won't embarrass them. But yeah, I mean, you look at their systems, and they got some real small credit unions that are, I mean, they're being run, but I can't say they're being run well. But I mean, they're trying. They're doing the best they can. So you just kind of have to work with them. Yeah, there's some risky ones there. I guess I'm trying to think of who's my worst. Asia, they're doing some wonderful things over there. I mean, the technology over there is incredible that they're developing. I mean, the fintech. We had our annual conference in Singapore 2 years ago because it's such a fintech tech center, and the technology that's coming out of there is just a phenomenon. They're doing wonderful things with digitization and how they communicate to each other, access to payment systems. And Africa is too. I mean, some of their loan monitoring things that they do on their cell phones is incredible. Yeah, I would say some of the countries in Africa are probably my riskiest among them all. Latin America does pretty good. They've done some. There's a couple of Caribbean countries that I'm a little worried about, but overall they're not bad. They just got a real bad reputation in the Caribbean for money laundering. Cayman Islands, and I mean, you think of all the banks. They're trying to get rid of that because they want investment, and so they're adopting a lot of the World Bank, IMF type reforms to help get rid of that. But there's a couple countries in Caribbean that are a little risky, but
okay, thanks.
I was telling Andy the other day, I find it interesting that in some of the developing countries, they don't have, or what ones I'm thinking of anyway, don't have, or credit unions don't anyway, have, maybe have any access to like ATM machines and coin counters and, all the modern conveniences and all that kind of stuff. But what they do have is that, because their credit unions were birthed more recently than most U.S. credit unions, they kind of skipped all of the check writing by consumers that we went through, and having to pull people along into more technology-oriented, remote access means of service and so on and so forth. But what people do in those developing nations all have is some kind of smartphone. And so my recollection, Andy, is that in a lot of those places, that those credit unions were able to gravitate right out of the starting gate or close to it, right to some basic app on a smartphone. That's their primary means of communication with those members and whatnot. Yet counter to that, I know some of them still, I forget what, some small credit unions that I ran across in Poland, I think, that very modern tech-wise, but still sending cash to members by the U.S. Postal Service out into, out into the countryside somewhere.
Yeah.
So being a mailman is probably a dangerous job on the countryside there.
Yeah.
But it's just kind of intriguing that, what we're trying to accomplish with the phone today, some of those credit unions and some of those developing nations, are actually in some ways ahead of us, sort of, or at least on par, because they went straight to the phone and skipped all the paper and everything.
Yeah, they are. So, some of the, and I spoke badly about Africa. Probably shouldn't have done that, but they have some of the best. I mean, with their agricultural monitoring, I mean, they're using drones to go out and look at the crops to see if they're growing, and that's how they're monitoring their loans. And you're just like, wow, that's really cool. I mean, we're not even do that here in the United States, but yeah, some of the technology that they're using is really incredible. And we're doing a lot of it. I mean, particularly in the refugees area, with doing the financial inclusion and trying to provide financial services to those who have been displaced. I mean, your loan officer banking program, send someone out on a motorcycle with an app, so that they can do the banking transactions. And you have to time up the loan disbursements to the deposit so that they're not carrying around, a bag of, a couple $1,000s. We have to match those up so that you take cash in and you turn it out. So the security is interesting, but the technology is absolutely what's allowing the financial inclusion, being able to serve those remote areas that don't have the infrastructure there. So yeah, digitization it's incredible what it can do, and it's happening.
Sometimes I think it's the laws that we all come up with in this country that hold us back from doing those kinds of things. Because I'm pretty sure if a Vermont Credit Union decided to send drones out to check on its members, there might be a law that addresses it.
Yeah.
Andy, this is
Go ahead, John.
This is John Cote. I work for Joe. About a year ago this time, I was doing some research for a presentation. And so this is sort of a two-part question. And I found the number of cooperative financial institutions internationally to be 89,000. I'm wondering if the COVID-19 experience, or whatever you want to call it, that you were talking about earlier, has dropped that number significantly. And the second part of that question was the 2018 WOCCU annual report. The goal was to reach 260 million members by 2020, and it had achieved it. You had achieved that by 2018, I believe. I wonder if you could just speak to that really quickly and see where those numbers are. Without putting you on the spot, I apologize.
Yeah, so our statistical report's about to come out, so which will answer that question. And I haven't frankly seen it yet. I think your number of members is right. I think COVID-19 is I mean, once over the next couple of years, no doubt you're going to have a global recession. Maybe not everywhere, and I'm not an economist, so Lord knows I shouldn't talk about these things. Maybe I think no doubt you're going to have a global recession. You're probably going to have a lot of consolidation. I think you're going to see a lot of credit unions that aren't going to make it, and you're going to have to merge them up. But yeah, the statistics that you cited are right. Yeah, our last focus used to be on number of members that were on credit union, but we met that goal really quickly. But it's interesting because what we found though is the key to that was because that growth didn't come equally from around the world. But what we found was that those credit unions that were digitizing were the systems that were able to grow and able to do it quickly and I mean, I'll say sustainably, but that's probably not true in every case. But I mean, growth in a good way. And so WOCCU switched its mission from focusing on the membership growth to, you know, getting the whole credit union digitized, because that's how those credit unions are going to be able to strong, be able to grow, integrating a payment system. And payment system, by the way, there's, oh my gosh, there's so much coming down the pike on that. That's going to be the biggest transformation over the next, you know, 4 to 5 years, if you want my opinion. The G20 is focused on it this year. All of the international standard setting bodies are focused on that. Fed Reserve with faster payments, whatnot, has its role there as well. And the ability to, I mean, integrate the world across border payments, all of that kind of stuff. So digitization has become our focus now, getting all the systems, because we know that's how we're going to be able to grow systems in a good way. Yeah, because we met that membership number growth quickly, but probably wasn't the best thing for us to focus on. It was a lesson that we kind of learned going through that process. Yeah, and I'll have to get back with you on the number, because I think that's about to come out here shortly, and I haven't seen the latest and greatest on that yet.
Thanks. I'll keep an eye out for the report.
I can give a little update. This is Greg Newman, Corporate Communications with WOCCU, kind of listening on Andy. And John, nice to virtually meet you. So last year we had our 2018 report. We saw about 274 million members. We are still collecting data for this year, but if I had to guess right now, we certainly will be at 280 million at least. I wouldn't be stunned if that number were higher, but we're still waiting on some pretty key growth areas to come in. So I wouldn't want to speculate beyond that, but it is probably going to just continue to go up this year.
Thank you.
Thanks. Other discussion, folks? Other questions or comments from anybody? All right. Well, hey, thank you very much. Thank you, Greg, for jumping in and joining us. And thank you, Andy, for making time out for us today. We really appreciate it very much. I know you don't get to travel, travel at all, like the rest of us. But hey, think of the parts of the world you're visiting Vermont right now. So
I know,
how
it's great.
fortunate are you? So thank you very much for enlightening us and sharing some of your knowledge about what's going on in credit union land elsewhere outside the United States. It's been interesting.
Well, thank you. And y'all have, I'm assuming you have my contact. Feel free to reach out anytime you want to. I'm happy to discuss these things, or if you want any insight on your U.S. laws, they usually come from an international standard setting body. So I can probably give you some insight into that, but.
Awesome. Hey, thank you very much, Andy.
Thank you. Appreciate it.
Before I got on this call, on this video chat, I was on a similar call that happens at 3 o'clock every week with my counterparts in other states and the advocacy people at CUNA. So just a couple really quick updates for you. One, there is no NCUA board meeting in August. I don't think there usually ever is, but just a housekeeping thing. The House is in recess right now, with an understanding that all members have to return to Washington within the 24-hour notice. And that's to accommodate, I want to say if, I was going to say when, but if the Senate works something out between the two parties and the White House regarding, new legislation and whatnot. And I know also, just before I was getting on this call, the news headlines I was seeing sounded like there was not a peep coming out of Washington today as far as the leadership was concerned, as far as all this stuff. They're just both at loggerheads, and it's still at a standstill. Maybe there's something going on behind closed doors we're not hearing about, but it's really disconcerting to see things lingering out there like that. What else? Houtman, I can never pronounce his name correctly, but the new NCUA board member to be. We put in the report last week that he cleared the Senate Banking Committee last week there were attempts, as I understand it, to hotline his appointment by the White House, which I don't fully understand all the details of the process, but the translation of it is to speed up the process so that he bypasses having to go to the Senate floor for approval and all that kind of stuff. That did not happen. It failed for some reason, not sure why. And so he, along with others that were before the Senate Banking Committee, have to go through the floor process of being approved by the Senate. There's some expectation that will happen before the elections, but no guarantee of that. And in, I think it was last Friday's update that I sent out, there was a little write-up there about the anticipated turnover in the NCUA board and starting with this one and how long his term would go and who the next one moving out would be and so on and so forth. So take a look at that if you want to see how much longer each one of the board members have in their stint on the board. And lastly, if you haven't done it yet, also in every update I've been sending out for the past week is a link to an action alert on CUNA's website on the Paycheck Protection Program. And basically the whole effort to try to get by, it's not just CUNA, it's every financial services lobbying group in DC is pushing for Congress to include in this new legislation a waiver of Paycheck Protection Program loans of $150,000 or less, just by having those borrowers certify, yes, I used it for the purpose that was intended, or something maybe a little bit more detailed than that, but that's the bottom line anyway. To just get rid of all of those, and you know, the expectation was that all of those loan stills people were going to turn into grants anyway, so why bother having lenders like yourselves jump through all the hoops and hurdles. And I think a lot of the borrowers, if they haven't come back to you yet to file their application for for forgiveness, there's, you know, apprehension about, you know, once I file, then my lender has, is it 60 days, I think it is, to act on it, and the SBA has another 90 days, or it's the other way around. But anyway, 150 days total anyway, potentially, before you, from the time that you file your application for forgiveness to the time you could theoretically hear something. Hopefully it would be faster than that, but it could be 150 days. And I think a lot of small businesses, they're scared that their loans aren't going to get waived. I see Gene and John on the line. I don't know if anybody else on the line originated any PPP loans, but I'm wondering if either of you have started having forgiveness applications come in yet? Because I think you're able to start submitting them today.
I couldn't give you a number, but I know we're starting to get them.
Yeah.
I'd have to check with our commercial lending group.
Right. Good.
I'm in the same spot. I need to check downstairs and see what's coming through.
And do you get the feeling that people that got those loans are, some of them anyway, a little antsy or apprehensive about whether their forgiveness is actually going to happen or not?
Oh, sure. Yeah. It's going to become a challenge because we're going to be in the middle, but we knew that going into it. So
right.
Ultimately, there's going to be a lot of nervousness.
I did read last Friday or Thursday that this new legislation, when and if it happens, will include another round of PPP financing, and that they would make it available to borrowers who already had a PPP loan already, which is good. Of course, they probably won't want to apply for a new one until they know the disposition of their old one. But anyway, right direction anyway.
Right.
So nothing seems to be moving very quickly. Okay, next week at this time, we've got Ryan Donovan on the line, who's going to be talking a lot more eloquently about all of this kind of stuff and whatever is or is not going on in Congress at the time. So I hope you and a whole bunch more people are able to join us at that time. And if, by the way, and John can elaborate on this if I missed something, you've all seen the announcement of our virtual annual meeting happening on October 8th. Not that our business meeting is, you know, something people are going to be dying to be listening to, but the presentations before and after are slated to be really riveting, I'll say, really good. So I think you'll enjoy both of those. And we've had a lot of people register, I've seen, John, through Eventbrite. So I'm really pleased by that.
Yeah, I think I think it's a case of, we had, I think, close to 10 registered just off of Newslines Express when we announced it last week, and that'll continue to happen as we go forward. And Joe has it in his COVID-19 updates and everything, which people will see. So, yeah, I think everyone's looking at October 8th as being like light years away right now, but you know, we'll get closer, and it should be really good. Some good speakers and some good content.
Right. So I hope you all get a chance to participate in at least some part of that on that afternoon. Molly Dillon, last person I'm going to pick on. Anything from Montpelier that we ought to know about?
No, I don't think so. Just lots of conversations about how all the NCUA and in NASCUS meetings on all of the factors in looking at exams. We're just like everybody else doing all virtual exams with all of you. So thank you very much for all your cooperation about that, especially getting in loan files. But that's been working relatively smoothly for us, and hopefully relatively smoothly for all of you.
Awesome.
Thanks, Joe.
Good to hear. Anything else we should squeeze in before we all part ways? All right. If not, thank you once again for joining us on a semi-lovely Monday afternoon. Appreciate it.
Thanks.
Thank you, Joe.
Have a good rest of your week. Bye-bye.